China has significantly increased its imports of Canadian oil, marking a strategic pivot away from U.S. crude. This shift is largely attributed to the expansion of Canada's Trans Mountain Pipeline, which has opened new avenues for Canadian oil exports to Asia. Trans Mountain expansion, a gateway to Asia. The TMX pipeline, operational since May 2024, has nearly tripled its capacity from 300,000 to 890,000 barrels per day. This expansion allows Canadian producers to access markets beyond the traditional U.S. Midwest refiners, reaching the Pacific coast for export to Asia. China's growing appetite for Canadian crude. Between May and November 2024, China accounted for approximately 50% of crude oil exports via Vancouver, amounting to $2 billion worth of Canadian oil. Major Chinese refiners like Sinochem and Rongsheng Petrochemical have been at the forefront of this trend. Sinochem purchased a 550,000-barrel cargo of Access Western Blend from Suncor Energy, while Rongsheng acquired 500,000 barrels of AWB through a tender from Total Energies. Decline in U.S. oil exports to China. In contrast, U.S. crude exports to China have seen a significant decline. In 2024, exports dropped by 46%, from 150.6 million barrels to 81.9 million barrels, making China the sixth-largest buyer of U.S. crude, down from second place the previous year. Factors contributing to this decline include China's slowing economic growth, increased adoption of electric vehicles, and a strategic shift towards diversified oil sources, including Russia and Iran. Economic and political implications. The TMX pipeline's expansion not only provides Canadian producers with better pricing opportunities but also reduces Canada's reliance on the U.S. market. This diversification is particularly significant given recent tensions in Canada-U.S. trade relations. Furthermore, the Canadian government's investment in the TMX project, despite environmental criticisms and cost overruns, is now yielding tangible economic benefits. Broader Asian interest. Beyond China, other Asian countries like Japan, South Korea, and Brunei have shown interest in Canadian crude. Refiners from these countries have purchased cargoes from the TMX pipeline, seeking to diversify their oil imports and reduce reliance on Middle Eastern and U.S. sources. China's increased import of Canadian oil signifies a notable shift in global oil trade dynamics. The TMX pipeline has played a pivotal role in facilitating this change, offering Canadian producers access to new markets and reducing dependency on the U.S. as global energy consumption patterns evolve. Such strategic shifts are likely to have lasting impacts on international trade and geopolitical relations.